Hello, everyone. Welcome to Rising C-Suites. This is our third ever youth financial literacy meeting. And so Rising C-Suites is going to be starting to put out lots of more YouTube videos. And as our first recruitment cycle just ended, we've developed a team which is going to consist of video editors, writing team, which is going to put out lots of articles. And so we're going to be pushing out lots more YouTube videos. They're going to be much shorter, but they're going to go into lots of more content. And so we'll go over to tax paying today. And so, Arv, if you want to take the agenda.
Yeah, so we'll start off doing the same introduction of tax paying we did in the first EBL meeting because just for the cohesiveness of this video. And going back to what Dar said about the videos are going to be a lot more shorter because we want to get straight to the point and get you the information in the most concise way possible. Anyways, continuing, we're going to go into tax deductions and credits, self-employment taxes, and then go over sales and capital gains tax. And then we'll answer any questions you may have in the comments on Rising C Suites LLC and Instagram, or just message us on risingcsuites@gmail.com.
So I want to get into an introduction to tax paying. Now I know I already went over this in the last video, but just for the cohesiveness, as Arv said, I want to make sure you guys have like a solid understanding of tax paying before I get into any further details about it. And so taxation is a legal obligation for most individuals and businesses, specifically in the US. I'll talk about the US tax system today. And so the US tax system is based on a progressive income tax with higher tax rates for higher levels of income. Now, federal, state, and local governments may all have their own income taxes, which can vary by location. And so, in addition to income tax, there may be other types of tax, such as sales tax, property tax, and payroll tax that all apply to you. Now, to file taxes, you will need information about your income, deductions, and credits. And deductions I'll be going over in the next slide. Electronic filing and paper filing are the two options available for filing taxes, and not all income is taxed, and some deductions and credits may offset your tax liability. Now, it's always a good idea to consult with a tax professional if you have any questions or concerns regarding if you're paying taxes for something or not, how to make the best tax related decisions. And it's always important to file taxes on time, even if you're not able to pay the full amount due. And so the IRS may offer payment plan and offer in compromise as options to help you pay off the balance.
All right, so next we'll be going over like tax deductions and credits. So tax deductions and credits are reductions to your taxable income that can lower your overall tax liability. And they reduce your taxable income, while tax credits are dollar for dollar reductions to your tax bill. So some common examples of these tax deductions include charitable donations, home mortgage interest, and state and local taxes. And understanding the various deductions and credits available can help you reduce your tax liability and maximize your tax refund. So, by taking advantage of deductions and credits, you can potentially lower your tax bill and receive a larger tax refund. And it's important to understand the rules and qualifications for each type of deduction and credit to ensure you're taking advantage of all the opportunities available to you.
And so next, I'm going to go over self-employment taxes. So there's lots of different types of taxes and different types of ways you have to pay for them, but self-employment tax is just one of them. And so self-employed individuals are responsible for paying both the employer and the employee portion of Social Security and Medicare taxes. And so this can result in a higher tax bill than someone who's just an employee of a company. And so it's important for self-employed individuals to always understand their tax obligations, set aside money for taxes throughout the year, and avoid a large tax bill at the end of the year. And so by understanding the tax obligations and setting aside money for taxes, self-employed individuals can ensure they're prepared for their tax liability and they avoid a large tax bill at the end of the year.
All right, so sales tax is a type of indirect tax imposed by the government on the sale of goods and services, and the rate varies from state to state and sometimes even within different cities and counties within the same state. And it's usually collected by the seller at the time of the sale, but in some cases it may be collected by the government and remitted to the state by the seller. And it's usually expressed as a percentage of the sales price, and it may be added to the price of the item displayed separately on the receipt. So whenever you go to any store and buy, like, let's say you buy groceries or something from Costco, on your receipt you should be able to see the taxes. So it's only charged on the final sale of goods or services to the end consumer and not on purchases made by businesses for resale or other business purchases in most states, and is generally required to be paid on the majority of goods and services, but there may be some exemptions for certain items such as food, medicine, or some other types of clothing. So some states also offer sales tax holidays where consumers can purchase certain items tax-free for a limited period of time, and online purchases may also be subject to sales tax depending on the state and seller's location. In recent years, many states have enacted laws to require online retailers to collect sales tax on sales to customers in their state, even if the retailer does not have a physical presence in the state. And it's very important for consumers to understand the sales tax laws in their state and to factor in the cost of sales tax when making purchases. And consumers who fail to pay sales tax on taxable purchases may be subject to penalties and interest charges.
And so I want to get into capital gains tax, right? And so capital gains tax is a tax on the profit made from the sale of a capital asset such as stocks, bonds, real estate, or personal property. So let's say you make money on a stock, right? When you sell the stock, you make a certain profit. The profit is going to be taxed. And so if you made $1,000, you're going to be paying a certain percentage of that in tax. Now, capital gains are taxed differently from ordinary income. And the tax rate depends on the length of time that the asset was held and the taxpayer's income tax bracket. And so in general, if a capital asset is held for more than a year, the gain is considered a long-term capital gain and is taxed at a lower rate than short-term capital gains, which are important to understand when you're investing in stocks, right? Because there's a long-term investment, short-term investments. And so these are gains made from assets held for less than a year. That's short-term capital gains. Whereas if it's held for more than a year, that's a long-term capital gain. Now, capital gains tax is typically calculated as the difference between the selling price of the asset and the cost of the asset, including any commissions or fees associated with the sale. And so in some cases, capital losses can be used to offset capital gains and reduce the overall tax liability. However, there are limits on the amount of capital losses that can be claimed in a given year, in a given tax year. And so capital gains tax is usually paid by the seller of the asset, but in some cases, the buyer may be responsible for paying the tax. It's important for investors to understand the tax implications of their investments and to factor in the cost of capital gains tax when making investment decisions. And so capital gains tax laws can vary from country to country, and it's important for individuals to understand the tax laws in their jurisdiction and to seek the advice of a tax professional if necessary.
All right, so we do have, like always, we have some resources you can go over if you want to learn more. So Darsh has a book he's working on called The World of Possibilities, and it's all about entrepreneurship. And I talk about finance in there, and there's some important investing strategies that Darsh goes over, which can be really helpful for all people interested in our videos. So I highly recommend checking this book out and following up on this because I think it can help a lot of youth entrepreneurs start their journey. I would also recommend The Psychology of Money by Morgan Housel and 12 Months to 1 Million by Ryan Daniel Morin. And again, for YouTube, check out this YouTube account for other videos. We'll be posting a lot more, like I said, shorter videos like this, and we'll have people talk about specific niche points in business and finance every month with a lot more videos out and some guest speaker meetings, which will have more information in the future. And be sure to check risingcsuites.com for these updates. As for other YouTube videos, we'd recommend the Rich Dad channel, the Financial Diet, and Financial Education, as Darsh and I use these to gain more financial education.
And so, as Arv said, I can't reiterate this enough. If you have any questions, feel free to ask us. Our startup consultation is free in the first few stages because we do want to build some small businesses out there. So if you guys have any ideas and you want to work with Rising C-Suites to make your business successful, come shoot us a DM. You can email risingcsuites@gmail.com. You can look at our website, risingcsuites.com, for any other information, or just leave a comment on this video and we'll make sure to respond to you. So thank you so much.
Thank you.